Stocks trade firm but ranged ahead of the US CPI inflation print. Pharma and auto eke out gains while FMCG drags.
Pharma stocks gain as Q4 is expected to see an improvement in margins owing to a decline in input and freight costs, even as key drugs keep exports healthy. Divis and Biocon lead the pack higher.
And the price of raw sugar hits a 11-year high as unseasonal rains in India and lower supplies from other producing nations fuel prices. Stocks of sugar mills rise on cue.
Sula Vineyards heads higher on its strongest quarterly sales. Puravankara jumps on strong Q4 update while a mega order win buoys BHEL and Titagarh wagons. And industry leaders Kumar Mangalam Birla, Sanjeev Bajaj, TV Narendran and Venu Srinivasan tell CNBC-TV18 that global uncertainties are a big concern even as the focus on infrastructure and development and growth can keep India resilient.
You're watching us here on Halftime Report on CNBC-TV18. Good afternoon. As Sonia said, industry leaders telling that, there could be uncertainties in the world, but India will be resilient. And that's exactly what's playing out in the market as well. A 40-point bump up for the Nifty. Every dip has been bought into. We're closer to the high point of trade than we were to the lowest point. And the mid-caps are outperforming. No problems whatsoever. Hi, Sonia. Hi.
Oh, no problems whatsoever. And I think, it's been, 7-8 days now that this market has been up and about, right?
8 days.
8 days running, FIs have been buying. At some point, there's going to be some consolidation.
Yep.
The market might sort of end this pullback, but there's no sign of that just yet. You never know if IT could be that trigger because the numbers are expected to be on the weaker side. And there's, of course, a lot of global data that's coming out later in the evening as well from the US. So give and take everything, it's a good market, 100 points higher on the Sensex now, just building on to its gains.
Yes, absolutely. And I think one of the key points which one of the experts made post the RBI policy was that maybe there is a turn in sentiment for the FIIs now that the RBI has halted in terms of the rate hiking cycle in India as well. It could be temporary. That's what the Reserve Bank of India has indicated, that inflation is top of mind. But maybe that could be one of the factors. But nonetheless, for the Nifty, the next port of call would be the 100-day moving average, which stands at around 17,889. We are currently above the 2050 as well as the 200-day moving average. The next point to track also would be the US CPI data, which is due this evening from the US. It is, remember that it fell to around 6% in the month of Feb 2023 versus 6.4% in Jan. So it has been declining for 8 consecutive months. But remember that the Fed target stands at 2%. It has reduced from a decade high of 9.1% to 6%. Let's see if it reduces further. But what is the Fed going to be happy with? And what will they do come May when they meet? That will be something which will also be determined by the Fed data, by the CPI data that comes out this evening. So important pivot for the markets.
Important indeed. And we'll let the Fed do what it does. Let's find out whether the RBI's pause has had an impact on the real estate space or not. Puravankara, they recently, about an hour ago, reported their fourth quarter business update where the company's actually achieved its highest ever annual and quarterly sales in any financial year since inception. So it's been a record-breaking quarter and a year for the company itself. Abhishek Kapoor, who's the CEO of the company, joins in now. Abhishek, you said that, back in the day when the RBI was consistently increasing rates, there wasn't much of an impact on demand. But do you think there could be a positive spillover now that there has been a bit of a pause? All those guys who were holding back perhaps will now go ahead and buy. And in your portfolio, what are the products which are doing well? Is it your affordable housing Provident or the luxury one Puravankara? What are your expectations?
Thanks, Mangalam, for having me on the show. So from the point of view of the market, what we see on the ground is really, as I said earlier also in the past, there is no impact of the rate hikes. In fact, this pause is only a positive for the sentiment for the home buyers, because now people can comfortably take the decision and there is an expectation, in fact, that this will continue to hold, which we are also hopeful, and I think it's a very, very positive development. And as a business, if you look at the business that we are doing today or the numbers that we have performed on last year, as you rightly said, highest ever for volume, 4 million square foot, value 3,100 crores, and collections, most importantly, which is 57% higher at 2,250 odd crores. All of this has come together because the brand and the market both are supporting. Of course, the brand is really, we have made a lot of structural changes, but coming back to the point, the demand has been cutting across all businesses, which means Puravankara, Provident and Purva Land, all three businesses have done very, very well. And what we are seeing is that really the demand is not getting impacted in any of the segments. In fact, it's more a factor of launches that decides which business is able to do better than the other. So that's the only limitation, supply side, not really the demand side.
But we had a very detailed conversation with a lot of real estate experts a couple of days ago, and they made this point that all markets are doing well, but Bangalore as a market is slowing down a bit because of the, the layoffs that are happening there, the slow growth in the IT sector, perhaps people preferring to rent rather than buy homes in Bangalore. You have a large presence there. So are you seeing some slowdown in that part of the market? And if yes, what do you think the impact could be? Could it be in, in the next few quarters? If yes, what could the growth slowdown look like?
Look, I have absolutely a contrary view. We have got the largest presence in Bangalore. Today on the ground, if you look at our business, we have performed very, very well in both sustenance and new launches. I think what's working for Bangalore are two things. Why people are buying. One is the rentals have gone up significantly. And that's happened because people have come back to work. And the other trend that we are clearly seeing is that companies have taken an in-principle decision that everybody has to come to work in a hybrid model, at least 3 days a week. In fact, we are aware that there are a whole lot of companies who have made announcements and given a time of 3 to 4 months or 5 months somewhere where people have to plan, and they're still not within the city because they had all gone to hometowns or other locations and they were operating from home because it was a work from home environment. But that's changed. So a lot more people are coming into Bangalore. And we expect this trend to continue, in fact, in next 4 to 6 months. If you look at last year's commercial demand, again, the numbers haven't really dropped. So, we don't see any real reason for seeing any slowdown. And that is, in fact, the fact of the numbers says it all, because we have really, really outperformed on our own numbers year-on-year basis. And our largest inventory has been sold in Bangalore. So we don't see any impact, and we don't forecast any impact as far as the Bangalore market is concerned. In fact, if you see, the realization has gone up, 14%, right? Same quarter last year versus this quarter. So there is a shortage of supply in Bangalore. If you look at the inventory overhang, you are looking at less than 12 months. Where is that coming from? The fact that it is less than 12 months, it's one of the lowest in the country.
But, Abhishek, in that context, though you are so bullish about, the Bengaluru market, not seeing any kind of slowdown, and FY23 has been a great year for you all, what do you think would probably be the biggest headwind going into FY24, according to the company, something which you would be looking out for very closely? And are you internally estimating that you can better this 29% growth in FY24? Are you confident of that?
So let me answer it in two parts. I think risk mitigation, risk assessment is part of our job, and we continue to do that on a very, very regular basis. One of the biggest risks and the concerns that we had was the fact that the interest rates have kept rising. So there is a mitigation plan that we have in place as far as the business is concerned, should the interest rate continue to go up. The second part is, as a business, we are looking at launching 14 million square foot in next financial year, which is starting April to the next March, right? We already launched 6 million square foot last year. Now that 6 million plus the 14 million, that 6 million goes into sustenance this year. So it will continue to add value to us. And the new launches will add further value in terms of sales and volumes and market share. So we are quite confident that we'll continue to grow. But having said that, as a risk mitigation, we do have a plan. One of the biggest concern was slowdown in the global environment and the global headwinds, but we believe that India will outperform the global markets. So far, we don't see any impact. And should there be any impact of interest rates or slowdown, then we do have a mitigation plan which is pretty much in place, and we believe that we'll be able to mitigate those risks as we go forward.
So let's put numbers and timelines to your aspirations. The last time we spoke, the value of your unsold inventory was close to around 5,600 crores. So point number one is, by when does all of that, get liquidated, or rather you make money on that? Secondly, what are your volume and value targets for FY24?
Look, we don't give forward-looking statements, but what I can share with you is that the total value that will get top line potentially, which will be on the floor by the end of next financial year, including the 6 million and the 14 million, which is about 20 million square foot, which will be on the floor, will be almost 15,000 crores over and above the 5,600 crores that you spoke about. So we will be in the market with almost 25,000 crores of inventory. So we believe that it's a matter for us to focus. We have made a lot of structural, fundamental changes in the company in last 3.5, 4 years, 5 years time frame, and I think we are in a great spot in terms of how we see our business unfolding in next 1 year and 2 years and so on.
All right. Okay, Abhishek, we'll leave it at that. Thanks a lot for joining in and giving us an update on the business and the way forward. Let's slip into a quick break on that note. On the other side of the break, lots more coming up on the markets. And of course, we have TCS earnings later today. More expectations on that. Stay tuned.
Welcome back. Well, let's talk about one of the big triggers for the next couple of days, you'd have to say. Fourth quarter earnings season begins today with the IT bellwether TCS due to report its numbers. Later today, Rima is here to tell us what we can expect from TCS. Rima.
Thanks so much for that. So we're looking at a dollar revenue growth of 1.9% on a quarter-on-quarter basis. In constant currency terms, it's expected to be a growth of 1%, but the range of estimates from the analysts is quite wide this time. There are a few analysts who are expecting a flat growth, and then you've got some expectations going up to a 1.7% growth. But what you need to bear in mind is that Q4 growth is likely to be less than Q3. Margins for TCS are likely to expand by 50 basis points to 25%, driven by the easing of supply-side pressure, improved utilization, and better efficiency. What will you watch for? The BFSI exposure of TCS stands at more than 30%. We've seen a global banking turmoil. Is it impacting BFSI revenues or deal conversions? Have banking clients paused on their tech spend? Are they being conservative? So the outlook on BFSI is going to be very crucial. Secondly, in an uncertain environment, the view on deal wins and deal pipeline in general. Now, TCS has guided that deal wins every quarter will be within a band of $7 to $9 billion. Will this continue even in FY24? This quarter, in Q4, deal wins are expected to be fairly robust. And then, thirdly, TCS has a new CEO designate who officially takes charge in September, K. Krithivasan. So priorities, the strategic direction of TCS under him will be tracked. Back to you.
Okay, I think that's going to be the most important. And this would be perhaps, Rima, the last press conference that Rajesh Gopinathan would attend. So I guess, that also assumes importance after a long and successful career. All eyes will be on what statements he makes in his last ever press conference. Rima, I think, that will be the focus area perhaps.
Rajesh is actually officially stepping down only in September. So he would be chairing the July press conference as well. So he's got one more quarter.
Okay.
TCS has given a 6-month overlap between the two, the outgoing CEO and the incoming CEO.
Okay, got that. That makes sense. Thanks a lot, Rima, for that. Well, you can catch the TCS management addressing the media at 5:30 p.m. later today, and of course, lots more on the numbers as well through the course of the day. But Biocon is surging in trade. It's up almost about 4% odd. Ekta, what seems to be driving the stock?
Well, there are two brokerage notes with regards to Biocon today, so that's the reason why you're seeing it buzzing in today's trading session. I'll start with BOFA, which is written on Biocon. They have a buy, but they've cut the target price to around 330 rupees versus 390. According to them, the risk-reward seems favorable at current levels, and the concerns about the biosimilar market being like the generics market is unwarranted. Now, Bernstein has also written on Biocon. They remain with their outperform stance and a target price of 290. According to them, there are a couple of highlights from the webinar with the Biocon Biologics leadership team, which they held. So a couple of takeaways include the Viatris deal rationale is to play the long-term biosimilars market. The integration with Viatris did not require much rationalization. The management is looking to raise funds, but with the right partner at the right price, and further stake sale in Syngene is something which is not in the mix right now. They are hopeful of launching insulin aspart by FY24, which has seen some delays along with even bevacizumab. And the management, very important, is rethinking and redrawing the contours of the Serum partnership given the COVID product demand is coming off. So these are a couple of key points to keep in mind with regards to Biocon. Remember, the stock itself has seen a strong correction, but is seeing a little bit of an up move today. So up around 4% currently for Biocon. Time for a break now, but up next, Aditya Agarwal will join in to discuss the technicals of the market.
Welcome back. The Nifty is inching closer towards the high point of trade, and what's taking it higher is the biggest heavyweight on the index. Among the bigger heavyweights on the index, which is HDFC Bank, which has moved to the high point of trade. The IT stocks are doing well ahead of TCS's numbers, but now paint stocks have begun to gather some pace as well. So we have Asian Paints, which has moved to the high point of trade, and alongside that, in the broader markets, Berger Paints too has moved well as well. So Berger Paints too comes up for you. Good time to get in a check on the F&O space too. It is the mid caps which are outperforming despite the pickup that we've seen in the frontline indices right now, and that's because it is the weekly options expiry for the mid cap index. So that becomes an index to monitor in the second half of trade. A lot of option writers playing for some premium there. But at the same time, the Nifty days high over the last few trading sessions has been inching higher, as has the lows of the trading session, and that means that we have seen an upward channel, but at the same time, at higher levels, we are facing some sort of resistance, and which is what gives the 17,800 call writers some, confidence to go ahead and write the calls that expire tomorrow. 17,800 call currently has a premium of 33 odd rupees, and 61 lakh shares have been added in open interest today. So 17,830, 17,850 could be a bit of a resistance, but the important part is that supports are moving higher as well. Yesterday, we had 17,600 and 17,700 put writers active. Now that has moved higher to 17,750. So that's telling you that 17,700 is an important support to watch. Do we run the risk of getting into some sort of resistance zone? The PCR yesterday was 1.2, right now as well as 1.2, and just a few hundred points from here for the Nifty Bank and the Nifty, we have the 100-day moving averages. So technical resistance after a 9-day rally, is that a concern or not? Probably Aditya will answer that better.
Okay, so we'll pose that question to him. Aditya Agarwal of Invest for Edu is joining us now on the show. Aditya, thanks for joining in. This market has had a very smooth run, but do you think it's running out of steam now? And what are the stocks that you're looking at today?
Hi, good afternoon. Thanks for on the show. Clearly, after a 9-day rally, we are running out of steam. And this was a surprise rally, to be honest. People were expecting a breakdown. On the flip side, markets turned around and given you a 1,000-point runaway on the upside in 9 trading sessions. On the upside, 17,800, 17,850 is the hurdle. And I believe markets will find some resistance there. And Bank Nifty 2 is slowly feeling the pinch and phasing out. So on the upside, 41,500 or 41,600 is the resistance on the Bank Nifty as well. So I wouldn't take a long trade on the Nifty or the Bank Nifty at current levels. Maybe if I'm holding on to long positions, I would try and book partial profits closer to about 17,800, 850 and trail stop losses to 17,700 or 17,750 because 150 point correction from current levels cannot be ruled out. Having said that, yes, there are a few pockets which are outperforming, especially the pharma space, the metals, that can continue to outperform going ahead as well.
Okay, all right. Pharma and metals can outperform going ahead. Any specific stocks that you would look at within these two sectors, and what are you any which way picking out today?
Yes, Ekta. So within the pharma space, definitely there's a stock which I've picked up. It's Granules. Looks good on the charts after consolidation. It's finally seeing a decent upside. So on the upside, the can test levels of 316. Traders can go ahead and buy at current levels. Look for a target of 316 with a stop loss at 293 on the downside. The second stock is GAIL. After a decent run-up, stock did see a bit of a correction and tested the neckline of the breakout. And in today's trade, it's up again on good volumes. So I believe it's done its bit of correction. It's on its way up again. So at current levels, one should definitely look at adding on to the position in GAIL's, maybe in the portfolio as well. And look for a target of 116 medium-term target with the stop loss at 104. Looks like a good trade in the offering.
Okay, thanks a lot, Aditya, for joining in and giving us those ideas. Well, let's do one thing. Let's take a quick break. We have an exclusive conversation lined up with the new Managing Director of Amul, Jayan Mehta, on their growth outlook and the outlook for the industry. Do stay tuned in for that. Welcome back to Halftime Report. Well, in a recent development, the Gujarat Cooperative Milk Marketing Federation, or AMUL, appointed Jayant Mehta as their new managing director. In an exclusive conversation, our colleague Shilpa Ranipeta caught up with the man himself and began by asking him on the outlook for business and growth going forward. Listen in.
We've been actually looking at a lot of things and a lot of initiatives to strengthen the entire movement, to build our brands, build our market, and more importantly, we closed the year with a growth of about 18.5%, achieved a turnover of about 55 crores for GCMMF, and the brand turnover of 72,000 crores, making Amul the largest FMCG brand in the country. We have been working on the plans how to strengthen our brand and our product range and the portfolio with the expansion for the next 5 to 7 years. And the plan for this year is to achieve a turnover of about 66,000 crores for GCF, a growth of 20%. And the brand turnover will also grow up about by the same ratio to more than 85,000 crores in the next year.
When you released your FY23 numbers earlier this year, you had said that you're eyeing a turnover of 1 lakh crore rupees by 2025. What will drive this growth? You recently forayed into a few categories like protein, probiotics, Indian sweets, frozen foods. Any more new categories that you're looking at?
We've recently got into the space of protein, high protein lassi, high protein buttermilk. This is one market where India imports more than 10 to 15,000 crore rupees worth of whey protein. And we are the largest manufacturer of cheese and paneer in India. So we have at our disposal close to 25-30 lakh liters of cheese whey every day. We are expanding this portfolio, launching protein water, high protein yogurt, high protein shakes, high protein milk, high protein chocolates, high protein cookies, high protein ice cream. So everything what you consume in your day, you can consume in a high protein format. One more important category which we are working on is organics. So as a brand, we got into this space last year. Today, we have about 8 to 10 products in the organic food category, starting with organic atta, the wheat flour, then the organic pulses, organic rice. We are getting into organic spices and a wide range of sugar and jaggery and even tea. So almost every item you consume in your kitchen will be available in the Amul organic format.
Well, that's a lot of expansion and a lot of new categories that you are looking at. But I want to talk to you about milk prices. Those have been elevated over the past few months. 2 price hikes we've seen in the past 2 quarters. And I want to understand from you, what is the current input cost scenario like? Do you think more price hikes are on the anvil, and do you anticipate that that could impact consumer demand?
You saw in the last 4 years, if you look at this entire price increase, we increased the price of our flagship brand, which is Amul Taza Toned Milk, only 6 times, which is about 12 rupees. So it comes to an average about 6.5%, which is lower than the average rate of inflation in the country. So this is where we need to carefully strike a balance of ability to pass on the increased input cost to the producer in form of an increase in prices to the consumer. And it's not easy, because we'll have to keep consumers on our side so that they continue to afford milk, as you rightly mentioned, as an essential product. It should not disturb their budgets beyond a point. But we should also be sensitive to the needs of our producers, because if there is a cost in input, increase in the input costs, increase in labor costs, increase in other costs for processing of milk and other things, the dairies and the cooperatives have to be supporting the farmers. See, there are certain input costs which actually don't get factored into the overall inflationary trends of the country. The cost of green fodder, the cost of dry fodder, availability of these items because of unseasonal rains and the weather patterns and changes in that. There's been a reduction in production of all these things, which leads to a steep rise in the cost of green fodder and dry fodder and so on. The other things which we can measure is we manufacture cattle feed, and there is an increase in the cost of the de-oiled rice bran. There is an increase in cost of maize. There is an increase in cost of rapeseed extractions. There is an increase in cost of molasses. So year on year, there's more than 20% increase in cost of the cattle feed that we give to our farmers. And feed contributes to almost 60-70% of the total cost of production of milk. And here we are assuming the farmer doesn't factor in his cost of labor or the alternate opportunities of employment. So a producer has to be kept interested in this business by at least providing the bare minimum increase in the input costs. Year on year, we are giving at least 15% more price for milk, which we purchase from the farmers. Okay. In Gujarat, we increased the price of this product only once, between 1st of April last year to 31st of March.
All right, so that's the first ever conversation that the new chief of Amul has had, and he's been speaking about all the right buzzwords, high protein and organic. So let's see whether that spurs up demand or not in the situation where, you know, they've been taking so many price hikes.
The only thing left for him to say was high
Vegan.
protein air. No, high protein air and high protein water. Apart from that, everything is high protein. No, but jokes
so
apart.
much protein.
I think vegan is the next buzzword, right?
But Amul can't do that, obviously, because
I think vegan has been the buzzword for the last, 5 years now. It's all
Just
over the
picking up
place.
pace.
Yeah, and Amul has been the one which is actually fighting the usage of the term milk for all the other alternate milk, liquids, which is almond milk and whatever, oat milk and all of that. You can't call them milk. You have to call them milk substitutes or something of that sort. So that's Amul for you. Having said that, the market continues to do well, but one stock which has been taking our breath away all the way since morning through the day and now has moved to the high point of trade is Divis Labs. 7.5%. What explains this move?
Well, you know, it's interesting because the street has started watching export data for a lot of these API injectable companies quite closely. So it's not only Divis, but the likes of Loris as well as the others, say something like a Gland, which are all buzzing on the back of this export data which gets released. Now, for Divis, the data that I've sourced is that the export data ex molnupiravir for Divis Labs in March is showing a recovery. It's coming at $92 million versus $70 million year on year. This is the highest that we've seen since Jan 2020. March data is higher than the run rate of around $50 to $60 million in the past few months. Now, a couple of key points is that the bump up is likely to be aided by higher custom synthesis sales. There is supplies of an API supply of a heart drug to Novartis, which could have aided sales, and that could be to the tune of up to around $15 to $17 million just in the month of March. Now, March data, remember, could also be due to a year-end factor. We have to see if it's a one-off and whether it sustains at these levels or not going forward. But the larger trend of a recovery is something that the street is enthused by. Now, remember that March 2023 data had little to no molnupiravir sales, and this is compared to $52 million, which was a peak amount of sales that they sold of molnupiravir in March of 2022. That's just an additional piece of information. Now, just want to point out that for Divis Labs, you're also seeing this kind of run up because the stock has corrected very significantly. It's down 9% year to date, down 33% from its 52-week high, though it's gained around 13% from its 52-week low. So it's trading at around 38 times versus a peak valuation of close to 60 times on a one-year forward basis. What is the street going to watch for in terms of the Q4 numbers going forward is going to be the margin recovery, because that had fallen to around 24% in the previous quarter, and whether or not there's going to be a sustained recovery in margins is the other big trigger for Divis Labs. Talking about pharmaceuticals, Lupin has launched their regional reference lab in the Bangalore market. So that stock is in focus on account of the diagnostic business. This is a part of the diagnostic business. The company has indicated that for diagnostics is not going to be more than around 5% of their total sales. So nonetheless, important news coming in on the diagnostic business for Lupin. They've made a headway in the Bangalore market.
Okay, well, let's move from medicines to sugar. The price of raw sugar has hit an 11-year high as unseasonal rains in India and lower supplies from other producing nations have fueled prices. Stocks of sugar mills have risen because of that. Surbhi is here to give us more data on all of that. Surbhi, over to you.
Sugar stocks are in focus today. All the sugar stocks are surging in trade, and that is because sugar prices in India have risen by approximately 7% in the past 3 weeks, and there are indications that they will continue to increase. Now, this price surge is driven by a combination of factors, including lower inventories and stronger demand. One of the primary reasons for the increase in the sugar prices is the fall in production. Additionally, the peak summer season has added to the increased demand for sugar, driving prices even higher. Another factor contributing to the price rise is the recent trend of ethanol production. Now, with the rise in ethanol production, sugar supply is being diverted to ethanol production, driving the prices even higher.
Okay, from sugar to Sula Vineyards, that's
Some say sugar and the products that Sula Vineyard makes are medicine enough for a lot of people.
That's true. But nonetheless, Sula Vineyards is in focus, and that one has jumped quite significantly. It's witnessed a 15% year-on-year growth in its own brand sales in Q4 of FY23. Surbhi is still with us to give us shed more light on this. Surbhi?
Sula Vineyards is surging in trade today, and that is because they've released their Q4 sales numbers, and for a seasonally weak quarter, the sales numbers are pretty strong. Their own brand sales has seen a sales growth of 15% in Q4 and a 26% growth on a year-on-year basis for FY23. Their wine tourism business has seen a growth of 18% in Q4 and 30% for FY23. With this, in FY23, they have reported the highest ever annual sales. The own brand sales is a little short of 500 crores, and the wine tourism revenue has clocked in at 45 crores. The growth in revenue is largely driven by premiumization. The elite and the premium brand sales contributed to 52% of their total sales versus 46% in the pre-pandemic times. And their company also expects the wine tourism to be 100 crores for FY24.
Okay, 100 crores, the wine tourism business in FY24. That's a big space and picking up quite a bit. Let's slip into a break. On the other side, an interesting insight lined up on a comparison between investments in hotels versus investments in hospitals. Stay tuned. Welcome back to Halftime Report on CNBC-TV18. Well, for now, just want to point out that despite the market being well, it's doing well, but nothing great or in terms of a top-line move. But there are plenty of stocks which are hitting fresh 52-week highs. So just want to make a mention on that. Bajaj Auto is one stock that has been soaring lately, and it's now up almost about 20% this year. That's the kind of gains it has under its belt. It's at a fresh 52-week high, Bajaj Auto. So do keep an eye out on that. India Mart is another stock that has made a good comeback this year. Remember, in the last 2 years, India Mart had suffered quite a bit, lost a lot of its value. But this year, it's back to almost 5,300. It's at a fresh 52-week high now, and the stock is up about 22%. Another stock that's hit a fresh high in the IT space is Cyient. So at 1,088, it's a gain of around 1% today, but 35% in 2023. So these are some of the laggards of last year that have come back this year and are making their presence felt. Data Patterns, Zydus Life, a couple of other names which are looking good. But let's listen into some exclusive conversations that we got earlier. Our colleague spoke to Sanjeev Bajaj, the chairman and managing director of Bajaj Finserv, on the sidelines of the AIMA Awards, and started off by asking him about the Indian banking segment in the context of the global banking stress. Listen into his views.
Very clearly, we are in a period of global uncertainty and a fairly extended period, and we still don't see the light at the end of the tunnel. I think in this situation, the significant, I would say, coordination between RBI and the Finance Ministry has put India on a very steady course of stable growth. And we can see that RBI is definitely managing both inflation, which is one of its foremost tasks, but keeping an eye on growth as well. And the rate pause that we saw this time is a welcome signal of that, while keeping in mind that, as RBI has very correctly said, that it will see how things are moving on the ground and decide what to do.
So as you spoke about the MPC's decision to pause rates, and they've said that it's not a pivot yet, how do you see that in the future? Do you expect more rate hikes or rate hikes or the pause again?
It's clearly a recognition that when you look at, say, the next 6 months, a year or so, there is no clear direction on where the global economy is headed, which means there's no clear direction on what our inflation is expected to be. And in a time like this, it is very appropriate for RBI not to lay out a long-term plan, but to react to the on-ground situation, which is what they have done. And I believe they will continue to do so based on what the actual parameters are for inflation and growth in the coming quarters.
In that context, what are the kind of headwinds that you are expecting to hit the economy? Are there any sorts of concerns for the Indian economy in this, at least in the FY24?
I see very clearly the uncertainties over war remains. Supply chains are still getting reoriented. Oil keeps moving up and down in price. We know that for India is our biggest import, and that can create a pressure for us both on currency and hence then on inflation as well.
Okay, so that is Sanjeev Bajaj talking about a whole host of issues. Just want to point out that a couple of stocks, even from the diagnostic space, are doing well. Lupin, yes, has moved to the high point of the day, up around 3% odd. But Metropolis, which is now down only around 2% odd on a year-to-date basis, is up 5% at this point in time. So good going for a couple of these other counters as well. But on to a Macquarie note, which says that retail loan demand has slowed down in Q4 FY23. Abhishek Kothari is here with the details on that. Abhishek.
Well, as you mentioned, Macquarie has come out with a note. Now, they had arranged a con call or a call with the DSA, that is direct selling agents. So over there, the DSA has mentioned that there is a slowdown in the demand for retail loans. So retail loan growth has seen slowdown in Q4 FY23. So call was done especially for home loans, lab, auto loans, personal loan, etc. across segments that are present in the retail loan space. A slowdown has taken place, especially in the salaried personal loan over there. So home loan rates have increased sharply, which has driven out investors from housing market. Pricing has been a deterrent to demand as well over there. And HDFC Bank is the strongest in personal loan business. So some of the new generation NBFCs have gotten more aggressive as they are ready to give higher ticket size loans and tap in the new customer that is there in the market. No major worries across segments in terms of delinquencies or NPAs. A strong push towards SME or business loan is happening. This will be a strong growth driver going ahead with the likes of GST has also helped SME segment. So PSU banks are now tapping into their large salary base in terms of the customer profile to augur well for growth going ahead. And end use demand has been good, especially in tier 2 and tier 3 cities, which are seeing strong demand in terms of the retail products. Back to you.
Okay, thanks a lot for that. So retail loan demand slowing down. I guess that was expected, right? I was going through a note from layoff.fyi, which is a company that tracks, a website that tracks tech sector job cuts. And they put out a note saying that over 36,000 people lost their jobs in India in the last 2 years, especially from the tech sector and the startup sector. So I guess, if people have no jobs, they can't perhaps take loans. So that's why there's a big slowdown over there. But let's do one thing. Let's take a quick break. On the other side, a commodity segment, Manisha Gupta will be joining in. She has with her Chirag Thakkar, the director of the Amrapali Group. Stay tuned.
Welcome back, and joining us on the show now is Chirag Thakkar. He's director at Amrapali Group. Chirag, thank you so much for joining us. And silver is on radar because we're trading at a 51-week highs on the COMEX markets there, where we have seen $25 per ounce also see a breach on the higher side. And the Indian markets have seen 76,000. So Chirag, not too far away from the all-time highs of 78,000 for the silver prices, just 2,000 away from those kind of levels. What is your sense on where are we heading for prices?
Hi, Manisha. Thank you for having me. So if you look at the timeline, so gold and silver, both are moving aligned together. At the same time, you see that in the last quarter, central bank started making more reserves added to their kitty on this all global central banks. Last week, there was a strong US employment data, so which is actually pointing towards Fed rates, which is next month, first week, where they will be deciding on the market rate hike. And you see the fundamental news all supporting gold and silver both, right? So if you see there's a major banking crisis happening in the major US economy. After that, we have some global geographical tensions happening over. Okay, and today is the most important day. We will be getting an inflation data in the evening today once US opens in the evening. So that will give a way where it will be headed for the next one couple of weeks, because what happens is, as of now, it's on a stagnant mode. There are not huge volumes at these levels happening.
Okay.
And if you look at the other hand, the Fed rate tool suggests there's a 70% chance of 25 basis points rise. Okay, right. And if that signals, I'm sure it could breach the higher levels in the anticipation of Fed pausing the rates or increasing. and so on.
You know, let me throw a number at you. And if you look at the last 1 year, Chirag, the range for silver has been 51,000 on the lower side, and now we've seen 76,000 on the higher side. If you look at the rest of 2023, what is the range that you see for silver?
Personally, I feel 68,000 would be a good level, wherein there'll be a very strong support on those levels. Because as we see these levels, 65,000, 68,000 in the Indian market, there'll surely be a physical demand coming in. So as soon as the physical demand comes in, the prices gets a very, very good support of those levels, because we already seen now 76,000. We are just away from the all-time high. We are just away 2,000. So I think 65,000 could be a good level on the downside.
Okay.
And on the higher side, we could as much as see 85,000 on the silver.
All right. Chirag, what is as you mentioned, the physical buying is almost absent right now. And we've seen prices gain up by 23% in the December quarter. March already has seen prices gain up by 10 to 12%. In this year, until now, we are up by 10% as we talk today. With the kind of price rise that we have seen, what is the discount that the Indian markets are working with? Because people are not buying and there's a lot of discount going on in the spot markets.
Yes. So if we talk about the spot market on the ground level, you see there's a discount of 3,000 to 4,000 per kg as of now. But there is no physical demand as of now. But there is not much liquidity as well. What kind of a liquidity at this certain discount levels which we saw in 2020, 21? Those were the discounts where the liquidity of the available physical metal was too high. At the same time, as of now, today at these levels, at the discount of 3,000 to 4,000, there is a very low liquidity. So let's say, for example, if market corrects itself and comes to around 70,000, 71,000, I'm sure this discount of 3,000 to 4,000 will go below 1,000. And we could see a physical demand coming in a very slight range could get started there.
Chirag, also next week is now Akshaya Tritiya, and we do see a lot of buying coming in during that time. Have you seen any pre-orders come in? Is there investment buying coming in at these levels for silver?
No.
Okay.
I think for the Akshaya Tritiya, I'm sure people will try to see if they have a budget of, let's say, X amount, they'll try to see for the auspicious thing, they'll try to have a very small amount of physical silver and gold added to the kitty for the Akshaya Tritiya date.
Okay, all right, Manisha, thanks very much for that. So that's on precious metals. For the markets, it's holding up quite steadily. We have the mid-cap index, which is marginally outperforming with a gain of around 0.5% at this point in time. Even on a week-to-date basis, the mid-cap index has done better than the frontline indices. Good advanced decline ratio on our hands, currently standing at around 2:1. With that, it's a wrap on Halftime Report. Business Lunch up next.